Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again as usual on euro currency. So from the tactical point of view, in the nearest few months, the major area for euro currency will be 104.50, 106. This is big magnet for price, just because it includes a lot of important levels. Just it will be enough to mention the yearly lows around 104.80 area, and that will be actually the major performance should happen. That will clarify the long-term sentiment and long-term tendency. In fact, if market will drop below the 105.70 and will form the bearish reversal swing on the weekly chart, it will change the long-term sentiment in the bearish side, and it will have far-going consequences. Actually, all the stuff totally corresponds to our long-term fundamental view. We actually suggest that this should happen. It's not necessary that it will happen immediately. So currently our fundamental report shows that investors are still in some euphoria and in some inspiration of the coming soon end of the Fed increasing cycle. That's expecting the drop on inflation and stabilizing everything. Everything will turn to the better, and we're coming out of the woods and so on. So their markets across the board are in a really rosy glasses right now. Very soon, we suspect that it should happen in the nearest couple of months. They will get the evidence and they will meet the cruel reality. That's everything goes absolutely different. That might be some shock on the market, but what definitely should happen is the explosive demand for United States dollar. And that's our expectation in the nearest few months. So in our position in the long term, at least in the perspective of the 6-8 months, it's not make any betting against the United States dollar, at least on the daily and high time frames. On the intraday charts, yes, of course, you could take the long positions because they are absolutely different scale and hardly relates to the fundamental swings that we have on the higher time frames. But on any time frame above the daily, it would be better to not consider any long positions. This is based from the fundamental point of view. All this stuff actually suggests that market should keep going lower. And if you remember, on Friday, we have said the one thing that we will be not surprised if market will not show any moderate retracement here. And we just said that we need to get some confirmation of our suggestion, whether it's true or not. And by the Friday action, it seems that we're, well, somewhere near to be correct around this suggestion. Let's take a look. Friday performance was obviously bearish. So we could see the spike up, and market has closed back to the lows. So this is some kind of the graveyard performance, and it suggests downward continuation. Market is not at the oversold anymore, so it easily could just keep going lower. On the 4-hour time frame chart for now, so we see that market start getting some signs of the bearish dynamic pressure. Grabber has worked, that we have mentioned, but the target of the grabber has been limited by the just minimum target. So it has had to complete action above this top, and this has happened with this spike up, but then market immediately dropped. So hardly we could call it as some preparation of the reversal and starting of the moderate pullback to the upside. Besides, you could see that market shows bearish action despite the trend stays bullish. This is clear sign of the bearish dynamic pressure. Finally, on the hourly chart, we have the same evidence of the dynamic pressure with even better looks here. At the same time, and the second thing, our hand shoulders that we were suggesting here has not been formed. or you could treat it as a failed. It's mostly the same. Price action remains choppy. All this stuff together makes me think that actually we should start preparing for challenge of the lows and downside breakout. That's what I think will happen on the next week. As a nearest destination, I could point the same target that we have on a weekly chart, as we said. This is 106.11, 106 area starting of the confluence area, and of course it is daily XOP theoretically should be on a halfway on it. It stands even lower, 104.75. So it's even, we're not talking about this. It's interesting that XOP, by the way, guys, stands right around yearly lows. It's very important. But as you can see, this is a long story until this level, because it stands even below the weekly confluence. But in general, it stands in the same area of our big range, where the market will spend a few months, I suppose, because it's a really very important area for the euro currency. So that being said, just for a short-term trading plan, we suggest that in the beginning of next week we could get the downside continuation. Correspondingly, next week we'll start watching for possible chances, possible trading setups for taking the new short positions.